chapter number 13, final accounts, wherein we learned about the meaning of the final account. We also talked about what are the various statements that are covered under the final account. Apart from the discussion of the basic concept, we did the question based on the trading account. So before going forward, let's just do one thing. Let's first of all revise everything. In the previous session, we understood that final account is nothing but statements, financial statements, which are prepared after the formation of the trial balance. Then we also understood that financial statement or the final account comprises of three statements, which is trading account, profit and loss account, and the balance sheet. In the last session, we talked about the trading account, wherein I told you that trading account is the first stage so it is the first step in the formation of the final account. Trading account deals with the direct expense and incomes relation to the production of goods and services. So all the expenses incurred at factory level are recorded in the trading account. Okay. And after covering this, we also understood that trading account is prepared with a view to determine the gross profit of an organization, of an entity. Then we understood the format of the trading account. This is how we prepare the trading account. Firstly, on the credit side of the trading account, we write down the value of the sales after reducing the value of the return outward or the return inward, which is sales return. Also on the right hand side of the trading account, which is the credit side, we also record the scrap value of sales, which is realizable by selling any old asset or anything. Then we write down the value of the closing stock. On the left hand side of the trading account, that is debit side of the trading account, we record the opening stock, purchases, less return outward, and all other direct expenses such as wages and salaries, carriage inward, and other factory related expenses. And after putting all the value on the relevant side of the trading account, we determine the gross profit or gross loss, depending upon which side is greater. If the debit side is greater than the credit side, then we have a situation of loss. If credit side is more than the debit side, it indicates gross profit. Okay. So we understood all these things in the previous session. Apart from this, we also covered what is the meaning of the direct expenses, what are the different expenses that are included in the direct expenses. We also understood that. After that, we did 3 questions based on the trading account. Like we did question number 1, and I think question number 2 also we did question number 3. We did question number 3 as well in the last session, and I gave question number 2 and 4 as a homework. So just wanted to confirm if all of you have attempted question number 2 or not, whether you have got the correct answer or not. Just tell me if you have any doubt. Done? Ritika. Could you please tell me the gross profit of question number 2? That is what I'm asking. Just tell me the gross profit you have got, then I'll 45,000. Okay. All right. So correct answer is 45,000. That is right. If you have got 45,000, both of you, then your answer is right. Okay. Both of you got the same answer, na?
Yes, sir. Yes, sir.
All right. Then question B we did the class itself. Question number 4 I gave as a homework. Tell me the gross profit in this case.
Yeah, wait a minute. I'm sure 50,000.
Sorry, could you please repeat?
50,000.
50,000. Yes, that is right. 50,000 is the correct answer. All right. Well done, both of you. Okay, so let's move forward. Let's do another question. But before that, to attempt any other question, we will have to understand this one small concept. There is one formula that we'll talk about. It is a formula of the cost of goods sold. Only then we will be able to attempt the question number 5. This is question number 5. But in order to solve this question, we'll have to first of all cover the concept of cost of goods sold. Okay, so these are two formula that you will have to remember. Please note this down in your notebook. First of all, cost of goods sold is calculated by adding the opening stock, the net value of the purchases, direct expenses, minus the closing stock. So what is the meaning of cost of goods sold? Cost of goods sold basically means the value of goods which has been sold to the customer. What was the cost of the good that is being sold to the customer? That is called cost of goods sold. Let's suppose just a minute. Let's suppose the total value of the sales is 50,000. The goods which is sold to the customer, its sales value is 50,000. But if we want to determine the cost, if we want to determine the cost of goods which has been sold to the customer, that cost is called cost of goods sold, also written as COGS. Cost of goods sold is also written as COGS. To determine the value of COGS, what do we do? We simply take the value of the opening stock, which will be given in the question most of the time. Then we add net value of purchases. Net purchases means purchases after adjusting the return outward. That is sale purchase return. That is net purchase. Opening stock plus net purchases. Then we also add all other direct expenses. Direct expenses means all direct expenses such as wages, factory overhead, carriage inward, or any other direct expense will also be recorded, will also be added. And after doing that, we'll subtract one value, which is the value of the closing stock. Closing stock. And after subtracting this, we will, whatever the value that we will get, that is considered as COGS, COGS, or cost of goods sold. This is a very important formula which will be very much helpful while attempting various questions in the chapters. You will have to learn this formula. You will have to remember this formula. Okay. Opening stock plus net purchases plus direct expense minus closing stock. And there is one more formula that you will have to learn, which is the formula for the adjusted purchase. Adjusted purchase. Adjusted purchase means, how do we calculate adjusted purchase? We take the value of the opening stock, opening stock plus net purchases, just like COGS, net purchases. But this time we do not subtract any direct expenses. Instead, we just subtract the closing stock. All right. So this is called adjusted purchase. This is our adjusted purchase. All right. Sometime instead of the opening stock, net purchase, closing stock, instead of all these information, question just give us the detail about the adjusted purchase. It just give one item instead of giving all these, instead of giving the value of the opening stock, net purchase, or the purchase return, purchases, closing stock. Question just provide you with the amount of adjusted purchases. So if it is given in the question, instead of opening stock, net purchases, closing stock, instead of all these items, if the adjusted purchases are given, then in that situation, keep that in mind that this is the adjusted value of all these values, opening stock, net purchases minus closing stock, collectively called adjusted purchase. All right. And if instead of opening stock and purchases, adjusted purchase is given in the question, then in that situation, trading account will be formed like this. This is how we will prepare the trading account. Like on the debit side, you can see this time we have no opening stock on the debit side, right? Instead of opening stock and purchases, we just wrote adjusted purchases. So adjusted purchases indicate that it contains the value of the opening stock as well as the net purchases. And also you will notice that on the credit side, we have no closing stock. Right now, you can notice that we on the credit side, we haven't written the value of the closing stock. Why? Because adjusted purchase already contains the amount of closing stock. Adjusted purchase is calculated by taking the by taking the closing stock into consideration. After taking it into consideration, only then we calculated its adjusted purchase. So if adjusted purchase is given there in the question, you don't have to show the value of the opening stock, you don't have to show the value of the purchases, purchase return, and the closing stock. Just write down on the debit side adjusted purchase, that will be sufficient. I hope this is clear, everybody.
Yes, sir.
Okay. So just do one thing, please note all this thing down in your note. Done, everyone? Done, just let me know once you are done. Done, everyone? Shall we proceed to the question?
Done, sir.
Done, okay. Zainab, you are done?
Done, sir.
Yes, sir.
Okay then. So here we go. Let's do question number 5. Okay. It says from the following information, prepare the trading account for the year ended 31st of March 2017. Adjusted purchases are given 15 lakh, sales value is given, return inward is there, freight and packaging expense on sales is given, depreciation is given, factory expenses is there, closing stock. So considering all these values, we need to prepare the trading account. As I want to take the screenshot of the question so that it will be easier for you to revise whenever you want to revise these questions. Just take the screenshot so that you can refer back to the question whenever you want. Okay, so let me solve this question for you, and I'll give you the next question to try. Firstly, question gives us the information about the adjusted purchases are given in the question, right? We just trading account for the year ending 2016-17. Adjusted purchases are given, na? So we'll write that on the debit side of the trading account. Na? We'll write this as to adjusted purchases. It's 15 lakh. Then we have the value of the sales, 21 lakh 40,000 by sales. But as I told you, sales is always written after adjusting the return inward. So return inward will be subtracted. Value of the sales was 21 lakh 40,000 and return inward is 40,000. The total value of the sales will be 21 lakh. Then we have freight and packaging. Freight and packaging is a direct expense. So we'll record that on the debit side too. Freight and packaging. Amount of freight and packaging was 15,000. After that, we have packing expenses on sales. So as the question specifically tells us that this is an expense relating to sales. So this expense won't be recorded in the trading account. Why? Because it is not related to factory. It is a sales expense. Sales expense is considered as an indirect expense, which will be considered while preparing the profit and loss account, not at the time of trading account. So packaging expense on sales won't be taken into consideration. Therefore, it won't be recorded in the trading account. For the time being, we can ignore this amount. Okay, next item is depreciation. We discussed about the depreciation in the last class as well, wherein if you are able to recall, I told you that depreciation is an indirect expense. Yeah, it needs to be taken into account while preparing the final account, profit and loss account only. In the trading account, it is not useful. It is not required to be recorded in the trading account. Okay. We can ignore this as well. Then we have factory expenses. So as the expense itself mentioned that it is related to factory, so we'll be recording that on the debit side of the trading account. Factory expense 60,000. And we have closing stock. Tell me everyone, whether we are required to write down the value of the closing stock in the trading account or not. Whether we should no. Why? Because the adjusted purchases is already there in the trading account, right? And adjusted purchase have already being calculated by adjusting the closing capital. So there is no need to show the trading. There is no need to show the closing stock in the trading account one more time. There is no need, so we won't be recording the value of the closing stock. This is it. Nothing else is there in the question. So we can finally figure out the profit or loss. Subtracting 15 lakh, 15,000, 60,000 out of 21 lakh. Answer will be 15 lakh 75,000 minus 21. Just a minute. 21 lakhs minus 15 lakh 75. 5 lakh 25,000 is the profit. And this is called gross profit. Understood, everyone? Is it clear to all of you? Yes or no?
Yes, sir.
Yes, sir.
Okay. Yes. Okay. So moving on to the next question. All right. Let's discuss question number 6. Question number 6. In this question, closing stock, wages, salary, and sales, adjusted purchases are given. Again, we need to prepare the trading account for this question as well. Do you want to try? Do you want to try this question, all of you?
Yes,
This
sir.
is an easy question.
Yes, sir.
Yeah. So okay. Try solving it within 5-6 minutes. I'm giving you 5 minutes. Solve it within that time. Let me know the gross profit you have got.
Done, sir.
Done. Who was that? Sorry, Vanisha, is that you?
Sir, it was me.
Ritika, okay.
Sir, done.
Okay. Yeah, all right. So Vanisha and Ritika, could you please tell me the cross profit you have got?
So I got
Sir,
98,000.
98,000.
All right, Zainab, you are done. Okay, anyway, so yeah, gross 98,000 is the correct answer. Well done, good job. All right, so this was question number 6. Next question number 7. Please try this as well. Question number 7. This time you don't have to prepare trading account because question just require you to calculate the value of the cost of goods sold. So just by applying the formula, you can get the value. You can get the answer.
I like football. Done, sir.
Done. Okay. Ritika, tell me the answer.
Sir, I got 85,000.
Zainab.
Sir, even I got 85,000.
All right. Vanisha, I'm waiting for your answer.
Sir, I got.
Okay. Zainab. Oh, Zainab is not responding today. Anyways, yeah. So 85,000 is the correct answer. Both of you. Well then, 85,000 is the correct answer. This is the formula. I'm sure all of you must have applied this formula. Opening stock plus purchase plus direct expense minus closing stock. All the values are given in the question itself. So it was an easy question. Next is question number 8. This time we need to determine the value of the cost of goods sold as well as gross profit. All right, gross profit. But since you already know the formula for finding out the cost of goods sold, let me tell you the formula for determining the gross profit. So you if you want to calculate gross profit, in that situation you can apply this formula. If the cost of goods sold is given in the question, then gross profit can be calculated simply by subtracting the cost of goods sold from the net value of sales. Net sales minus cost of goods sold will give you the gross profit. And mind it, how do we determine net sales? Net sales is calculated simply by subtracting sales return out of total sales. Total sales minus return inward or sales return It's the same thing, sales return. This is called net sale. After getting the value of the net sale, you just have to subtract COGS. And you already know how to calculate COGS, right now. Please note this down. This is the formula which will be used while calculating gross profit if cost of goods sold is given in the question. And after writing this formula in your notebook, I attempt the next question. Question number 8.
So what would be the formula for gross loss?
For the gross loss as well, we will apply the same formula. If we get the negative value, that will be gross loss. If we get the positive value, that will be gross profit.
Okay, sir.
Like, I mean, if the value of the cost of goods sold is greater than the net sales, then it is a situation of loss. If we have got a positive value, that means COGS is less than the net sales value, that indicates a situation of gross profit.
Okay, sir. Now
Okay, so this is the next question, question number 8. Try solving this.
So done.
Okay.
Done, sir.
Just a minute. All right, just a moment. Yeah, tell me the answers. Tell me the answer for the cost of goods sold first.
because you scored all my kills. So 2,82,000.
2,82,000.
282, right? And gross profit is
1,10,000.
10,000.
yes. So this is how we will calculate cost of goods sold. Opening plus net purchase plus direct expense minus closing stock. Opening stock is 32,000. Net purchase is given without in this question we have no purchase return. So the entire purchase value will be considered as the net purchase itself. Plus direct expenses is also given by the name itself. Direct expenses is given as 20,000 minus 50,000 as the closing stock. So totaling all this will be 3,32,000 minus 50,000. You will get 2,82,000. This is the COGS. And to determine the gross profit, we have to subtract COGS out of net sales. Value of the net sales will be 3,92,000 after subtracting the sales return, obviously. And final answer will be 1 lakh. Okay, so this was question number 8. Next question. Try this one. In this question, we need to determine the profit, gross profit, as well as the cost of goods.
What is the amount given in gross profit?
Gross profit is 33.33. This is 33, 1 by 3% means 33.33 percentage.
Okay, sir.
Done, all of you?
Yes, sir. I don't know.
Mhm. Tell me, Ritika, the gross profit you have got?
I don't know. 3,996. Yeah, I don't.
3,996. You can round it off to 4,000. If it is
Okay, sir.
3,996, it can be rounded off as 4,000. So gross profit can be taken as 4,000. All right.
Okay, sir.
This is how we will calculate gross profit. Now sales into 33.33%. Sales value given as 12,000 into 33.33%. Value will be 4,000. We have rounded it off to 4,000. Correct answer is 3,999.9 something, 96 or something. So it will be 4,000. And to determine the value of the COGS, all of you know that we need to subtract gross profit out of net sales. The net sales is already given in the question, which is 12,000 minus 4,000. We will get 16,000 as the COGS. Manisha and Zainab, please confirm if this is clear or not.
Sir, how will we get 16,000 if we deduct 4,000 from 4,000? Yeah.
Out, sorry. We will get 8,000. 8,000 should be the right answer, na?
Yes, sir.
I'm sorry. Done. Is it clear, everybody? Vanisha, any
Yes,
doubt?
sir.
Zainab, any doubts?
No, sir.
So,
All right. So let's do few more questions. Question number 9. This is little difficult comparing with the previous questions. Anyways, it says we need to determine the gross profit on the basis of the following information: purchases, return outward, carriage inward, carriage outward. Wages is given. Three-fourth of the goods are sold for rupees 6 lakh. So the goods which has been sold, three-fourth of the goods sold is for rupees 6 lakh. So this is the sales value of three-fourth of the goods. Okay. And we need to find out the gross profit. So just keep that in mind. If the sales value of the three-fourth of the goods is given in the question, then we need to determine the cost of goods sold in respect of three-fourth of the goods only. All right. And then only we will be able to determine the value of the gross profit. See, I'm sure all of you understand that in order to determine the value of the gross profit, what do? We just simply subtract the, we take the value of the sales, right? And we subtract the COGS out of it. But the sales value in this question is given in respect of three-fourth of the goods, right? Sales value which is given in the question, 6 lakh, is in respect of how much good? Three-fourth of the goods which has been sold. So when you will calculate the COGS, you need to ensure that you must get the cost of goods sold in respect of three-fourth goods only. Okay. Only then you will be able to get the correct amount of gross profit. This is an important point in this question. So do you want to try this question on your own? This, in fact, I want all of you to try this question at least once. And if you get it wrong, I'll help you tell you the correct answer. Okay, Katika, Jainab, and Ganesha. Just calculate the COGS as usual, as we usually do, without considering, without taking into, without worrying about the three-fourths of the COGS. Just calculate the COGS of all the goods which has been sold. Solution to question number. This must be question number 10. Got it, everyone? Done, all of you? Doing, everyone? Vanisha, Ritika, Zanab, any doubts?
Yes, sir.
Anyone want help? Any doubts? All right, anyways, see, this is how we'll solve the question. First of all, we need to determine the value of the COGS, right? So, for the purpose of calculating COGS, we'll apply this formula: opening stock plus net purchase plus direct expense minus closing stock. Since the value of the opening stock is not given in the question, so we will simply take it as a zero, assuming that there is no opening stock. Net purchases need to be calculated by subtracting the return outward, that is purchase return. So 680 minus 30 will be 6,50,000, right? Plus we'll add direct expenses. There are two direct expenses given in the question. Firstly, it is carriage inward, and then we have wages. So adding both of these, we will get 20,000. Plus 70,000. 20 plus 50. And there is no closing stock given in the question as well. So the total COGS will be 7,20,000. Okay. So now pay attention, try to understand. This is very, very important. 7,20,000, which is the cost of goods sold, is the cost of how much good? It is the cost of 100% of the goods. It is the cost of 100% of the goods. But tell me whether 100% of the goods are sold in the market. Answer is no. We were able to sell only we were able to sell only 3/4 of the goods. And the goods which has been sold, 3/4 of the goods which has been sold, it has been sold at a value of 6 lakh. So we need to determine the gross profit in respect of goods actually sold in the market. We need to determine the gross profit in respect of only those goods which has been sold in the market. So if the sales value is given in respect of 3/4 of the goods only, then for the correct determination of gross profit, we will have to determine the cost of goods in respect of 3/4 of the, 3/4 of the cost of 3/4 of the goods need to be calculated to determine the correct amount of gross profit. You understand that? So this is the cost of 100% of the goods, but out of it, we just need to determine the cost of 3/4 of the goods. So if it is this, if 7,20,000 is the cost of 100% of the goods, to determine the cost of 3/4 of the goods being sold, we just need to multiply the entire cost with the 3/4, and this way we will get 5,40,000. So this is the cost of goods. So this is the cost of 3/4 of the goods sold. All right, is that clear? Everybody, is it clear or not?
Yes, sir.
Okay,
Yes, sir.
now we can determine the profit. Now to determine the gross profit, what we'll do, gross profit is calculated simply by subtracting the COGS out of net sales. Since no sales return is given in the question, so we'll presume that whatever the sales value is given in the question, that is the net sales itself. So 6 lakhs minus 5,40,000, and the correct answer will be, gross profit will be 60,000. Got it, everyone? Is this clear to all of you?
Sir, can you
Yes,
show the
sir.
question 1 minute?
Can you, sorry, Pratika, could you please repeat?
So that was Manisha.
Yeah,
Sir,
sorry,
this minute.
Manisha.
Sir, can you show the question 1 minute?
Yeah.
Yes, sir.
Okay. All right. So this is all about the calculation of gross profit and COGS. Let me check if I have any question that I can give you as a homework. Yeah, kindly take the screenshot of this question. Question number 11. This will be question number 11. Take the screenshot. In this question, you need to determine the value of the closing stock and the cost of the food. Done with the screenshot, all of you?
Yes, sir.
Yes, sir.
And also take the screenshot of question number 12.
Done, sir.
Done.
Thank you.
And let me check any other question. Yeah, you can try this one as well. Question number 13. These are all very small questions. It won't take a long time to solve this question. I'm sure all of you will be able to solve it within 15-20 minutes. And I'm giving you one last question. Question number 4. So these are 4 questions that I'm giving you as a homework. We'll be talking more about the trading. In fact, we'll start profit and loss account in the next session probably. If you're able to solve these questions. Okay, so this is it, all of you. This is it for today's session. Thank you so much for joining. We'll see you in the next question with a new concept. Till then, take care. Goodbye.
Thank you, sir.
Thank you, sir.